focus and let's talk to the management of Shriram Properties right now. We've got Gopalakrishnan J, the ED and Group CEO of the company, joining in right now. Remember, they're in their 25th year of operations, and they've got some very ambitious targets set in there. So let's talk a little bit more about that. Mr. Gopalakrishnan, thank you so much for joining in today. And firstly, congratulations. You're entering your 25th year. It's quite a milestone there. And you've set out some very big targets as well for yourself. You're looking to double your sales, triple your income, quadruple profits in the next 3 years. Quantify these targets for us. And if you could really, put a number or a range to it.
Yeah, for taking it online, within the 25th year of ambition is to be 25 years in the next 10 years. That's the first ambition that we have. Looking closer, for the next 3 years, we would like to double our we would like to double our and triple our income and last year, sold about 2,500.
We've got you on a very bad audio line. We'll try and reconnect with you in just a short while from now. Just not audible there, that line. But yes, we will speak about Shriram Properties and the kind of benchmarks that they've set for themselves and the internal targets that they're working with when it comes to the kind of profits, the income, as well as the sales target that they've set for themselves. We'll just speak with the management and try and patch them again. I think Mr. Gopalakrishnan is back with us. Mr. Gopalakrishnan, if you could just repeat your answer. We just couldn't hear you, sir.
Yes, thank you. Thank you for taking us online. So what we have set out ourselves as long-term ambition is to achieve what we did in 25 years for the next decade. That's our long-term goal and objective. Looking shorter term over the next 3 years, we want to double our sales, which means we did about 2,400 crore worth of sales last year. And we would like to reach a target of 5,000 crore worth of sales by FY27, 2027. And we would like to triple our income recognition. As you know, in real estate, the income recognized after a couple of years when we hand over the unit. And at that time, so therefore, we are looking at by 2027, can we triple our income from a 900 crore income recognition or revenue that we had last fiscal. We go about 2,000 crores of revenue by 2027. And a quadruple of profits between FY24 and 2027, and we quadruple our profit. That's the broad target that we set for ourselves as part of our next leg of growth that we are pursuing
Okay, point taken. So you have set those tall targets for yourself, sir. But I want a bit more clarity as to how are you going to achieve that? Because doubling the number in terms of revenue, 3x the profit, these are tall asks. In terms of the pipeline, what else is lined up, and how are you going to achieve this exactly?
So if I convert that into volume terms, I'm looking at from a 4.5 million square feet that we did in FY24. We would like to sell anywhere between about 7 to 8 million, or upwards of 8 million square feet by 27. And this would mean accumulatively over a period of 3 years, we should be selling about 20 million square feet with an enhanced focus on mid-market and mid-market premium segments. We're very confident of achieving this, and that will transform us to the targets that we are looking for. And to achieve this, we have a pipeline of about 42 million square feet, out of which 24 million is ongoing. Therefore, we have 18 million square feet of future project pipeline. We are at an advanced stage of several new project discussions. Our endeavor will be to reach double this future pipeline from 18 million square feet to about 35-36 million square feet over the next 18 to 24 months Therefore, we can get them ready for launch and execute this whole game plan in 3 years' time.
Right. Mr. Gopalakrishnan, do you think that you will require some financing that you would be looking at, given the expansion plans that you just spoke about? Any fundraising, I suppose, if you could share any thoughts on that?
We believe we may not need an external funding from an equity perspective. Just to clarify, we are not looking at any equity or dilution at this point of time. And if I look at the overall funding required, this addition of another 19 million square feet of pipeline would require, I think the value of this pipeline could be anywhere between upwards of 2,000 crores. I think since we primarily follow or predominantly we focus on partnership models like JDAs and investment platforms where we get financial and strategic investors into the project. We believe we would need about 400 crores of our own capital to achieve this pipeline. And over the next 3 to 3 years, our ongoing projects alone will unlock significant part of this cash requirement for us. And therefore, we are very confident of managing this growth with our own capital from operations, free cash flow from operations, as well as from investment platform where we will do a co-investment like what we did with the ASK co-investment platform. So we are not really looking at raising equity capital. From time to time, we may look for a bit of a debt to interimly support growth and then repay them from cash from operations. That's broadly the overall 3-year vision that we have started off with, the 3-year vision that we are pursuing now.
I just wanted to go back and talk about the budget announcements because PMAY was something that the government was talking about. They have laid out quite a few allocations for the 2.0 scheme as well. Could you talk to me about, is this something which comes within your area of exposure? And if yes, what could be the potential impact on the business from the PMAY scheme?
Historically, we had focused on both the mid-market and affordable, and PMAY obviously has a direct impact on affordable segment. And that's doing very well. And we've also had some presence there. But we want to, over the next few years, we would like to focus more aggressively and focus on mid-market premium and mid-market segments, what we call mid segments. They account for a substantial part of the market these days. If I look at the last couple of years, the trend has been post-COVID, customers have shifted towards mid-products, mid-segment products, whether it is mid-market or mid-market premium. And today in cities like Bangalore, 74% of housing sales is in mid-market segments. And therefore, we wanted to focus more aggressively on it. Historically, if I look at my completed portfolio as well as ongoing, about 67-68% of my portfolio is in mid-market anyway. So we want to enhance the share further, and it does not mean that we will not look at other segments, but mid-market, the premium and mid-market products together, what the mid-segment we call it, should account for 80% of our portfolio going forward is the target. The housing changes have some impact on affordable, but in any case, currently also going forward also we want to enhance the focus on mid segment. Therefore, we think it may or may not have a very significant direct impact on our targets in terms of sales or growth prospects.
Okay. Thank you so much, sir, for joining in with us this morning on ET Now and giving us the vision about the company going forward.
If you like this video, then like, share and subscribe to ET Now.